This brand new monthly dividend ETF is copying the billionaire investor Bill Ackman's portfolio. Ticker ACKY is the newest fund by VistaShares. You probably know them from their Warren Buffett fund, which is OMAH, or their other income fund, ticker QUSA, both popular funds that launched earlier this year. We're going to get into this video. We're going to cover Bill Ackman's career and a lot of his achievements and talk about how he's been able to overcome the S&P 500 by a significant margin over the last decade. So I hope you guys do enjoy. Don't forget, if you're interested in income, if you're interested in dividends, to like and subscribe so you don't miss out on all the updates. Now, let's roll that intro. For those that like OMAH, or ticker OMAH, the Warren Buffett fund, ACKY is very similar to it. It's that target 15. You're trying to get a 15% distribution rate, and you're tracking the very famous investor's portfolio of Bill Ackman. Now, I'm curious to see how ACKY performs versus OMAH. That'll be very, very interesting. But the reasons to invest, all the details are very similar between these two funds. The only real difference is the underlying. But the summary, we'll talk about the important features of this fund. Number one, of course, is going to be income. The VistaShares Target 15 ETF offers investors core equity portfolio that mirrors the top publicly disclosed holdings of William Ackman's Pershing Square Capital, which we'll talk about. He founded that company in, I think, 2004. A prominent hedge fund, very prominent, I will say, while leveraging the experience of the portfolio management team seeking to generate high monthly income. Of course, ACKY is not affiliated with Pershing Square Capital or Bill Ackman. Now, it's an actively managed exchange-traded fund that seeks income and secondarily long-term capital appreciation, which I love. I love a fund that has a good yield, but also can maintain some growth over the long term because I like to drip my dividends. That's me personally, and so I love seeing that growth aspect with the dividends as well. And so there's tons of good details on here. We're going to pull up the fact sheet, but I first want to say thank you and let everyone know this is a sponsored video by VistaShares. I know sponsorships get different reactions, and I totally understand it as someone that views a lot of content on YouTube, but I am excited about this fund, and I really will be tracking it consistently like I have been with QUSA and OMAH. One thing that also came out of this was I'm hoping to get an interview with Adam Patty, who is the CEO of VistaShares, which could be phenomenal. And of course, if you guys want that, let me know down in the comments. I like these style of ETFs, same with OMAH, where it's targeting that 15%, but still giving you some growth opportunities. It's very different from a lot of other funds that are boasting 50 to 100% yields. I'm okay with lower yields and consistency and zero NAV erosion because I'm investing for the long term. But of course, let me know what you guys think. Now, getting into their fact sheet, we can see the number of holdings is 11, which we're going to talk about that and how Bill Ackman invests. He's very concentrated with his investments, and that works really well when the market's crazy, and it works terribly when his funds are dropping, or when his investments are dropping, I should say. But all in all, he's done really well, as you guys know. The total expense ratio, 0.95%, a little bit on the higher side. It's just the way it goes. These ETFs, the actively managed ones, they do charge more than, of course, passive ones that are not actively managed. It is what it is. What comes to my mind with this is performance. You have to see a phenomenal performance to offset those losses that we're going to get with the expense ratio. My opinion, I know some people have that similar opinion. Some people will avoid a fund with a higher expense ratio, and that's okay too. We don't have tons of data out, of course, because no dividends have been paid. We haven't even really seen this thing trade for a full week. So we'll go over the top holdings, which I think is really important. Number one is Uber at 20%. This is an interesting one. Very interesting in my opinion, because Uber, I go back and forth. There's so many ride-sharing apps now, but I do think long-term, it does make sense. Now, hear me out. I know depending on where you live, this is a good or bad pick. So I recently was in New York, and you Uber everywhere. It's just the way that it goes. So even though I'm from a smaller town in California and we don't use Uber often, the bigger cities and whatnot utilize it all the time. I also use it when I travel, getting to and from the airports and whatnot. Then we have Brookfield Corporation. We have Restaurant Brands International. We have Howard Hughes Holdings. We have Amazon, which I recently read they doubled down on, meaning that they are sticking with it and putting more money into it, was at least the article that I read about a day ago. We have Alphabet, Google. We have Chipotle Mexican Grill, which is a crazy story that we're going to talk about in just a moment. We have Alphabet Class A, we have Hilton, and we have Hertz, which is a very, very small portion of the portfolio. But of course, these are going to change as Pershing Capital changes their overall investments, which I'm really curious to see what they do, especially since the market's been a little bit rocky lately. Yes, we're still in a green market, but people seem to be a little more on edge. So I'm curious what you guys think about that in the comments as well as what do you think of these top holdings? We have a lot of money in Uber, so curious as to what everyone thinks on just that one specific underlying. Now let's jump into Bill Ackman's story. I will be the first to admit, when I first heard of ACKY, I was like, Bill Ackman, heard the name, heard the investment, what he likes. I knew it was Chipotle, but I didn't really know his story. So I looked it up and I did find some really interesting information and a wildly successful man himself. So he started his company, it's a hedge fund, Pershing Capital, in 2004 with $54 million. I just pulled it up because I don't want to mess up the exact number, but currently today, they are worth, the net worth or market cap ranges from 7.7 billion to 10.7 billion, which is a wide range, but a lot of money. And it's a hedge fund, of course, but it also reportedly has 19 billion in AUM. That was as of late 2024. And so he has wildly outperformed the market. I believe he's averaging like a 10% outperformance of the S&P 500, but he does it in a way that a lot of people aren't comfortable with. He is very, very precise, and he does not hold a lot of underlying stocks. He buys 10 or 11, and that's like his core portfolio, and he puts tons of money into them. And so when they do super well, amazing. When they don't do super well, not amazing. But we're going to scroll down. We can see some of his best investments. We have Chipotle, where he put a ton of money in and made a ton of money at the end. And so we can see he bought 1.2 billion stake in the company and said about its recovery. Now I'm going to talk about how he does things. It is definitely interesting. And shares since then have climbed 600% since that purchase, which is wild. Lowe's, a similar story, but not as amazing, where they ended up being up 175% from their average cost. That is wild. And now I want you to think they're not putting in like $100,000. We're talking millions, at some point, billions of dollars. A massive difference. And then we also know he implemented a strategy during the GFC where he bought $27 million worth of credit default swaps on investment-grade bond indexes in early 2020. So it was super profitable as we then saw the global economy halt with COVID-19, the pandemic plunge, the drop, which was wild. And his swaps grew to $2.6 billion. 27 million to $2.6 billion, betting kind of just against the market, which is wild. Absolutely wild. So why do people not love this strategy? Well, for one, it's highly concentrated, and I'm a big fan of diversification, but I kind of go back and forth. And one thing I will say is Bill Ackman's a better investor than I am. So I don't like to really try to dissect the way people do things, especially when they're at this level, they have this much money. But there is one thing that's very, very important. Just because he isn't super diversified doesn't mean we shouldn't be. One thing with how Bill Ackman trades is he is kind of like a takeover style investor, I guess you would even say. So he has a lot to say, and he has a lot of opinions on how things should be done. So his ability to take over these companies, I shouldn't even say take over, to impact these companies, it's up there. He has a $1 billion company himself. So he can fluctuate with the pricing, and he can say, this is what should be done. This is what needs to be done. And he has a lot more opportunity to change the outcome of these companies and the experience and knowledge to do so. And so that was one thing, is people talking about, well, should I copy his exact trades? If you want to copy his exact trades, I'm not going to say it's wrong. He has the insider data on how he's going to make these companies better, and he's proven that he can do it. So he's outperformed. I can't say much negative about that. And I think it'll be really interesting seeing how this correlates with ACKY, with ACKY. Are we going to see it go up in price consistently? Is it going to be that consistent dividend with changes in growth, where it has some growth good one year, some not as good other years? Genuinely very, very curious. And I want to know what you guys think. Do you guys like these style of ETF investments where you're getting a targeted 15% income as well as some growth? Of course, that growth is going to be a little bit capped, so you're hoping for that slower growth over time. But I definitely think this will be a great competitor for OMAH. I'm going to be tracking exactly how they perform against each other once we see ACKY trade a little bit more in the market. Since I've talked about it so much, let's look at OMAH real quick. We can see it's the Berkshire Select Income ETF that target 15%. Very similar to ACKY, and it has done well despite the market being very rocky since its launch, which was in March. If you haven't been tracking the market actively, March was a terrible month, followed up by an even worse month of April. We do see the same expense ratio. We can see the net assets being $485 million. Very solid AUM. And the NAV sitting around that 1940, originally probably that $20 range as well. So I'm not going to dive too far into it, but one thing I want to mention is this 15% distribution rate is 1.25% monthly. That's what you're getting every single month. So if you're compounding, that's going to do better and better over time. And I like that Vista Shares is, again, targeting this. It's high income for sure. 15% is amazing. We might be a little bit diluted by the fact that we've seen funds try and pay out 70, 80, 100% with the NAV eroding consistently. That's not what they're doing. It's not just another fund like that. I also think the number of holdings, 117, showcase that this one is significantly more diversified, but you're talking Warren Buffett versus Bill Ackman. Both amazing investors with very different strategies. So all that to say, develop your own strategy. Let me know what you guys think about ACKY or ACKY. Are you going to be buying it? Are you going to be watching it? Do you think it'll be better or worse than OMAH? Do you like Bill Ackman more than Warren Buffett? It's hard to say. Both amazing investors with very different backstories. So I hope you guys enjoyed this video. Again, a massive shout out to Vista Shares for sponsoring the video. Give some feedback down in the comments. Let me know what you think. And if you enjoyed this video, check these out on your screen right now. Thank you so much for watching. Hope to see you in the next video.